Happy Trade Deal Day. Big signing today. Champagne bottles, corks popping out all over. Hi, Brock. You know what they say, the devil's in the details. So I wouldn't be surprised if it starts to be picked apart. Hi, Paul. How you doing? So last week on longs in Euro USD, the stop was under 1080. Survived, right? Back to the channel line, and then we had this nice little reversal. It was yesterday. Okay, and we cracked this channel line. So on longs, you should have nice partial profits, right? From last week or this candle, right? We're never stopped out, so maybe you have 40, 50 pips. So you take a piece, maybe book half, and now you have a couple of choices for trailing your stops. I wouldn't want to see it back under this channel line. That's pretty tight at 111.32. Perhaps you want to give it tolerance, but I wouldn't want to see it back trading under 1120 now. So as the market progresses, you trail your stops, right? Who in here trails their stops when they have a good trade working for them? If not, you may want to experiment with it. I know there's some people that actually have some type of EA that does that for them. I use my eyeballs. Is it time for gold and silver? I was talking to some people over the weekend, and it's predicated on a breakdown in the yen, which we still need a false breakdown. It still has to close on my work under 69. It's not that far away, but there's something incomplete to me on this pattern. Sometimes two drives work, but I'm not, I wouldn't rule out another pop up. I want to take a quick look at VIX because our guest today, Michael Listman, his handle is at Michael Listman, but it's UVXY. So I'm assuming that he trades derivatives. Okay, so there was yesterday's action in the VIX, and here's the daily. So I'm not saying it looks good. I'm not saying that. But, sometimes markets look the worst and there's their lows. And I know Ride the Curve said, Dale, you have to stop trying to bottom pick. But I'd go out and buy some deferred VIX calls because Steve's triangle and this triangle, next time through 16, 25 is viable, maybe in the 30s. They're probably giving calls away right now. DSI on VIX was 9. That's another reason I bring it up. Okay. And let's see what else. These are also the other two keys. And, I've been talking about them every day, but look at where the bonds are holding, the 30-year yield. Okay. So they actually, I was talking about yesterday, look a little worse. They're already testing this trend line on the verge of breaking it, whereas the 10-year, see the space. So what's happening here again? We got that steepening and the market was celebrating that, right? While this was going on, the 30-year was outperforming, which meant yields were steepening. But I look at these charts and it looks like they're starting to, head back into the direction of inversion. It depends on the dated instrument that you choose, but that's what I'm seeing. And now let's talk about the S&Ps quickly. I'm really interested to hear what the team says, but still hasn't done anything wrong yet, but on the daily, it's pretty glaring. So we took out the eclipse high, but again under 70. The 1 hour, I think, confirmed, yeah. So the 1 hour, the shorter time frames confirmed. But one thing I just want to mention, and we're not that far away from 3,300 and some of the golden ratios, and I saw someone talking 3,330-ish. Just something I've noticed over the years, that when everyone's looking for one number, one area, the market either at times doesn't achieve it, and if it gets to it, it ends up not being as significant. And in fact, I've seen those numbers that everyone was looking for as far as a potential lower high end up being a hot knife through butter at those levels. So a lot of people looking for 3,300. Okay. And maybe there are too many. Okay. So FX Cola, here's my suggestion. Make a recording. And with that being said, watch this 109.70 level in US dollar yen. And there was just one other thing. I tweeted this yesterday. It's giving up a little bit of it, but talked about it yesterday. US dollar won, and we had a throw over. It's trying to get back in the channel. So we'll see what happens if we don't get a big blow off in S&Ps. That it was a sell the rumor of the deal and buy the fact in US dollar won. I just would have a hard time being short down here. To me, it looks like we're on the verge of a false breakdown. So I'm looking for two false breakdowns here. Here, a false breakdown, and I'm going to give to Blake because I know he wants to get back to shooting, and the yen back under. I actually have it like 69.70 in that area. If a candle closes back in here, the breakout's negated. Okay. Hi, Blake. How are you today, bro?
Hey, good morning, Coach.
It's early.
It is early. I was just looking at the time change, and I've got 2 more months before I've got to adjust my clock. So
yeah, okay.
back to your
Enjoy.
time.
Back to my time.
Back to your
You mean
time.
forward to my
What's that?
Forward to my time. I'm older than you.
Yeah. I don't think I'm gonna catch you. So
good. Lucky, man. I hope you do.
What's that?
Well, one day I hope you for sure hope you do. You will.
Yeah, one day.
Experience that, ancient
one day.
age.
Oh man, I just got out of this Euro New Zealand a little too early. I picked this up yesterday, or not yesterday, this morning when I got up, and I tweeted about it, and I just took it off the table at like 87, and I picked it up for a quick 30 pips.
That's a nice breakout.
Yeah, it is. It's breaking out pretty good. So I'd be buying dips. Now this is the between the Euro Aussie, the Euro New Zealand. These are pairs that are moving higher that suggest that there's a little bit of risk aversion coming in the market. So when you see the Euro New Zealand, Euro Aussie move higher, that's what tends to happen. One of the other things that you have to think about regarding these two particular pairs, and let me ask you this, Dale, what currencies in the currency market were most likely to benefit from a China-US trade deal? The Aussie and the Kiwi, right?
Okay, yeah, you've been talking about their underperformance for
Yeah,
weeks.
that's been the really big issue, right? Is their underperformance.
So
Now,
it's their weakness and the euro stability that gave this pair jet fuel.
well, it's really you know, the if this China US trade deal was supposed to be so great, or
Yeah,
is supposed to be so great, the currencies that should be outperforming right now should be the Aussie and the Kiwi.
right.
We should see the Australian dollar. Not, you know, not to mention, you know, you could talk about the CNH and the
Yeah,
yen and all that other
okay.
hoopla, but
But they're neighbors that have all the metals
they
and
are
all the commodities
they
and
are direct beneficiaries from
yeah,
China. Now, one of the things that you can also think about is and the flip side of that is with China agreeing to buy so much,
from
you
us.
know, from us. Where does that take away from? Because it is a zero sum game. If you're China and you're not buying from somewhere and you're buying from somewhere else, then it's going to take away from, you know,
Yeah,
Australia and New Zealand somewhat as well. Australia and New Zealand will also do better if China's economy can stabilize, but their currencies are looking like they're going to get demolished at this point. So the euro and the New Zealand, or excuse me, the Aussie and the New Zealand, these are currencies that I believe you can play on the long side or on the short side against the euro.
okay.
And you know, the euro is I've, you know, been talking about quite frequently. And you know, I picked it up yesterday. By the way, if you were here yesterday, I picked it up at 111.10, sold it at like 111.30. I just bought it again because
Nice.
we're above this downtrend line, and
Yeah, you
I am
gave
expecting.
everyone the entry yesterday, Blake. I remember it
Yeah, and I thank you. I'm
before it
expecting the
happened.
euro to head back up towards 112. So um, one of the things that you have to think about going into this, you know, China U.S. trade deal signing, which by the way, if you do not know, it is happening at 11:30 p.m. Eastern. So I guess Vice Trade Chair Lee, I don't know. Anyway,
AM
he's
or PM Eastern?
uh, t- um, uh,
Not PM.
AM
Yeah, okay.
noon,
All right.
basically at
Got it.
noon. So he's supposed to arrive at the White House at 11:15. Signings at 11:30. Then there's going to be fireworks and dancers
Oh,
and, you
wow.
know, shish kebabs and, you know, all sorts of fun stuff.
They
But
install poles
they
near the for the pole dancers.
that'll be for a little later, I'm sure. Um, I'm 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 100% positive that's happening a little bit later. But needless to say, we're going to get the signing, and you know, as the details emerge, what we're learning is that seems like this is more. It's not as much about substance, more about the, you know, just a deal in principle. The numbers are, you know, within market expectations, and we are really at risk at a buy the rumor, sell the news. Now, what I'm hoping is going to happen. This is my hope here, and that doesn't mean it's going to play out this way. It's just my hope. Um, if you take like the S&P, what I'm hoping is going to happen today is that we see a rally to new highs and then it back off. And if that happens, damn it, this Euro New Zealand, it's so irritating. Um, and if that happens, I'm actually looking to buy the US dollar Mexican peso if it can break these lows. This is like a big floor in the US dollar Mexican peso. I've got to imagine there's a ton of stops down here. And what I'm looking to do is I'm looking to, you know, let it break through these lows and then, you know, and then get long. That's my intent today. It doesn't mean it's going to happen. That just means that that's what I want to happen. I do want to play the dollar long against the peso. I do want to play, the commodity currencies on the short side. But you know, you can see the dollar mex is just ripping up here, and I mean, the thing is, regarding like this particular pair, is it's going to be really hard to chase it. And the fact of the matter is it's gonna it, it it's hard to chase this one higher, but at the same time, it has probably the highest probability of ripping people's faces off today. And this is one that I need to keep an eye on today. I think, for those of you guys that trade it, we're in the FX market, we're constant search of volatility. And, the volatility that we're going to find is in some of these commodity currencies, some of these commodity crosses. We're going to find them in, some of the emerging market currencies and crosses, like the, peso, maybe like the rand, which I haven't done a lot of analysis on the rand as of late, but you know, this particular pair could be a mover as well, especially if we get back above the 200-day moving average. Something that looks like this could be pretty bullish. You know, it look pretty bullish if we can get up there. But these are currencies that I'm paying more attention to, because the major currencies are just not yielding us that big of moves. Like I said, I'll pick up the euro. I'll make 15, 20 pips on it. I'll spin out of it. It's fine. Like I got hit on the cable overnight on a bid at 129.24, 25 or 85, excuse me, right here, as it dipped right into my bid, because I was playing it off of this trend line, and it dipped right into my bid, hit me. I mean, literally hit me within a pip of the lows. And I told everybody yesterday, I was long the cable yesterday, and I told everybody in the chat room, in our members chat room, for those of you that are Forex Analytics subscribers, that I was picking up the cable on a dip, and it worked out fine. My stop's already at break even, but I'm not super excited about the cable yet on the long side. I am overall bullish the pound. I think the pound has the ability to rally back to 131 and maybe even further than that. But I'm just buying dips and I'm selling it on rallies until we can get out of this longer term triangle, as you see here. So I picked it up, was it yesterday or the day before yesterday? Sold it yesterday, bought it again this morning. I'll, try to sell it a little higher today. And that's my intent. Man, this Euro New Zealand is absolutely ripping faces off right now. Holy cow. And I got out of this thing about 25 pips ago. Look at this thing. Just,
Oh,
man,
wow.
ripping Stelios.
Good morning.
I'm telling you, the what's happening in the Kiwi and the Aussie, you heard me say it, Stella. It is a zero-sum game. When you take away from one, if China's not going to buy from one place, they're going to buy from another. You know what I mean?
Yeah, absolutely.
So where does that leave Australia and New Zealand? Probably holding the short end of the stick. So for those of you that have been buying the Aussie and thinking, well, what's good for China is good for Australia, is it? Is it in all actuality? I think that you have to be really careful where you're playing the dollar against. Like I said, I'm predominantly a dollar bear, but it doesn't mean that I'm uh, shorting the dollar against everything. I'd rather play the euro and the cable to the upside, play the dollar yen to the downside, and as far as the Aussie and the Kiwi go, I'd just rather just be short against those on the crosses. So anyway, there's the Aussie. Here's the Kiwi, just getting destroyed this morning, and Kiwi's been really underperforming anyway. We're going to be testing some pretty key levels of support here in the Kiwi as we come down to about 65.50. So we're about 20 pips away from finding some support there in the Kiwi dollar. But yeah, you got to be real careful with the Euro Aussie. And for those of you that are Forex Analytics subscribers, you can see that I've had a pattern and play on the inverted head and shoulder pattern on the Euro Aussie for a few days, and I've been buying and selling that thing for the last week, I guess, looking for this eventually 163 to break, and us to head back to 166ish. So, oh, I'm sorry. I thought I was just hearing Steve, but it was from my office in Greenwich. Let's take a real quick look at the S&P before we I turn it over to Steve and Stelios. The S&P again, we're coming into that big confluence. This is a huge confluence of resistance, and one of the things that I love to do as a trader, and this is something that you guys can really think about moving forward, is I like to see multiple confluences of levels being tested at one time, and that usually will give me a little bit of an edge on where a turning point could be in the market. And in the S&P, I'm specifically looking at 3,300, 3,315 roughly. It depends, if you're looking at the cash market, it might be around 3,305. But what I'm basically looking at is I'm looking at 161% extension of the big swoon that we saw in the end of 2018. That comes in at 133.18. Then the sell-off that we had, following the Iran, missile crisis, if you will. I'm joking, but the launches and the little assassination of the Iranian leader. That dip, 161% extension, comes right in at the same spot. So what I'm hoping for is for the S&P to just make one last stab at those highs, and I am actually laying into some shorts. So, and that's been a personal setup of mine. I've been waiting for, I think I've told all of you guys probably for the last 6 or 8 months, maybe year. When we get the signed phase 1 deal, I think it's going to be buy the rumor, sell the news. But I've been saying that for quite some time as the market's been pricing it all in. I thought the announcement of the phase 1 signing might give us that reversal, and it didn't. So I'm waiting for, like today, the actual signing. It is inked, done and dusted, and then looking for a reversal in equities. I'm going to see, obviously I'm just not going to step in and start shorting. I'm just going to see what the price action brings the next couple of days. It would be silly just to be buying and selling, here based on events. You got to watch price action. So my bias is for a reversal in equities. So I'll be watching price action going into the next couple of days, looking for that reversal if I can get it. And like I said, if you're in the Forex Analytics members chat room, which this is what it looks like,
you'll know when Blake's pulling the trigger, and
you'll know when I'm pulling the
Amanda.
trigger, because that's where I'm, I spend all my time throughout the course of the day. So if you want to get to the Forex Analytics chat room, let me put that back really quick. If you want to get to the Forex Analytics chat room, when you're logged in, it's just this little button right here next to your icon. It says go to chat room. And I got to make one last mention before I turn it over to Steve and Stelios for producer prices. Guys, once a year, well, actually twice a year, but once a year, prices come down to these levels, which is, our New Year offer. It's the beginning of the year. And you're not going to find deals like this all the time. You're just not. And the other time that we do it is at the beginning of the trading season, which is, roughly end of August, beginning of September. So if you've been waiting to join the Forex Analytics team, this is the time to do it. And we have the premium plan that's $120 a month. You get a substantial discount. And our light version, even if you are like, well, that's a little too steep, and I want to do the light version at $19 a month. At least you get the app. You get all my basic technical analysis throughout the course of the day. When I see something, I'll update it. But you also get all of the evening analysis on the on the platform, and you can download the app and have the app so it's all on your phone, and every time a support or resistance level is breached, you are notified. When there's a new update, you're notified via your mobile. So it's
why underpricing this product by $30, Blake?
What?
Why underpricing this product by at least $30?
What, the
light?
The light? Well, in my opinion, I want everybody to be able to afford at least, being part of the family and being able to, read my analysis throughout the course of the day. And it's not just my analysis, it's Amanda. She updates in the European hours on basic technical analysis.
Okay, I rest my case.
Paulie does. But I want, Paulie does in the evenings. I just want everybody to be able to have and be notified via mobile. Now, if you want to come chat with myself and the rest of the team, you have to be involved in the premium product. But I try to give the most value for money, and I think that's what we aim to do. And it's unless you're buying one of these special pricing deals, it's a month-to-month deal. So if you don't like it, just cancel it, and that's it. So anyway,
that's what makes Blake a little bit different than most of the guys in the industry, the barracudas out there. Of course, you have the charlatans, but here we wear our hearts on our sleeves, and we want to help as many people as possible. So Blake and those guys wouldn't listen to me to charge $49 for that.
Well, hey guys, so just remember, I'll be on the daily roundup webinar today. It will be 1 hour after the signing. So if you want an update of what has just happened during the signing, and the market might actually be really active at that point, I'll see you today 4 hours from now on the daily roundup webinar. So Steve, Stelios, good morning, gentlemen.
Good morning, everybody.
Good morning.
Welcome to Trade Signing Day.
Yeah, wow.
Big day.
Yeah. What kind of pens do they use, Stel? Do you know?
Yeah, I don't know. Mont Blanc, I don't know. I mean, let's see what they're going to give us, because there's been a lot of talk yesterday. There were some comments from Mnuchin about not rolling back any of the tariffs before the elections. And that the markets didn't like that for about 2 minutes, and then they rallied back, which was incredible to watch. But it's going to be all on the details, and as many details as they give us. They did say that Mnuchin today or earlier said that the phase 1 deal is expected, as we knew, pretty much to include around 200 billion of US goods to be bought by China, which is a variety of stuff like manufacturing goods, agriculture, services, a lot of stuff. And then
I take the under.
Yeah. No, I agree. That's what they're saying.
Yeah.
And
devil's in the details, huh, guys?
After the
devil will be in the details today for sure.
Yeah.
Hey guys, I gotta get hopping. I want to pass the screen over to Steve, but Stelios, I didn't want to interrupt. You guys have a great session today. I'll see you in about 4 hours.
Thank you, Blake.
Thank you, Blake.
Blake, I heard you just got nominated on FX Street for Nobel Peace Prize in Humanitarianism.
Whatever. All right. Talk to you guys later.
Whatever.
See you guys.
Guys, you know what whatever means, really? When people say that, huh?
When
it's a polite way.
Yeah. Sod off.
Yeah.
Sog off, piss off. Yeah. That's pretty much it. See you guys.
Whatever, Blake.
Thank you, Blake.
Anyway, go ahead.
So yeah, let's see what comes next. And there's going to be a phase 2, which apparently is going to be split into phase 2, part 1, 2, and 3. I mean, I don't know.
Gosh.
I don't think anybody knows. And
Trump doesn't know.
Yeah,
How can anyone else know?
Oh, Trump knows. There's not going to be a phase 2
he knows
during this
millennium.
During this presidential
election
period, until we get the elections. And I'm very, very, very doubtful that we're going to get one after, because don't forget that once we go through the presidential elections, of course, if he doesn't get reelected, it's not something he can do about it, or it's not his. Oh wait, we have
5 seconds. 5 seconds.
Yeah, let me bring the data flash
so
here.
PPI and Empire State Manufacturing.
Any second now. There we go.
Empire State is better. PPI is worse.
PPI
marginally worse. Marginally.
Yeah, the year-on-year is as expected. The year-on-year core is a little bit lower. U.S. New York Fed manufacturing is better.
Yeah, nothing.
I don't
I'm
think that's
guessing.
anything that will really move the markets.
Unfortunately, no. So, okay, well, let's see what happens.
So if he gets re-elected, on the other hand, he has no real incentive to go through with the deal afterwards, because I've said it since the beginning, and I think it's now common understanding. The US is not going to get a good deal from China. So I mean, the pretend game that they are on course to get something good has a reason of being there until we get the elections, but no reason following that. So I think that after that, if we assume that Trump gets re-elected, he will have no reason to pretend that he's getting a good deal. So he will be able to play tough again and say that, they're not giving a good enough deal, so I'm not going to deal with them, because he's not looking to be re-elected following that. So I'm very doubtful that we will ever get a phase 2 deal. I'm almost certain we're not getting a phase 2 before the elections, unless things become really bad with the stock market or whatever, and then they get to believe that perhaps that can throw a lifeline. But unless we see scenarios like that, I don't think we're going to see anything happening. So it is what it is. What else did we have, Stelio?
Yes, we had stuff out of the UK today. Actually, first of all, we had the German annual GDP for last year was confirmed at 0.6%.
Yeah, 0.6,
which was the lowest in 8 years or 5 years or whatever.
6 or 8 years, something like that. Yeah.
Yeah. So that was, that was expected. So it wasn't a surprise, but it's still not a good reading. We had a couple of things out of the UK. So first, Saunders from the MPC, a big dove, has voted twice or 3 times for a cut already. Spoke was dovish as expected, but like I said in the chat room, you can't vote twice to cut rates. So we know, a dove's a dove, and that's it. So a surprise would have been the other way, I think, if for whatever reason it wasn't as dovish. But anyway, that was that. And we also had CPI out of the UK. Came in weaker than expected, 1.3% year on year, expected 1.5%, and it's now going well below 2%, which is the target. Remember that wage growth is still growing above 3%, so this gap is very healthy now, and it's something to consider. The interesting thing was that even with dovish Saunders and weak CPI, cable is hovering around 130.
Yeah, it's still stuck in this triangle. Yesterday it had an update. Today so far it's more or less unchanged. On the other hand, euro has been overperforming. So there was a question yesterday which I didn't have time to answer. I saw it at the end before, just before we got our guest on. The question had to do with what's happening here with the Europound, and I think that there is a good chance that the Europound is on its way to another leg higher. So that would bode well with a few more, at least a few more days of a euro overperforming the cable. If you remember, once we had that single up day up there, I remember that day we also had Greg on. I said 2 times, one when we got Greg, and I asked for his comment, and one before that I thought that Europound would at least hit the 86-cent level in the days to follow. We actually got that yesterday. Yeah, we got that yesterday. But now that I've seen more price action, because when I made that comment, we just had that big up day that brought us to 84.80. Now that I've seen more of the price action, I'm actually expecting higher levels than 86 cents. So if we go to the 4-hour chart, here it is. Sorry, my mistake. That's actually the weekly. If we go to the 4-hour chart, there we go. You'll see that equality target comes at 87.70.
That was such a big number that it was holding for such a long time too, Steve.
Yeah.
Before the big breakdown.
Yeah. So I think that we should be seeing. I don't know if we're going to see 87.70, but I see no reason why we can't, move roughly to 87 cents from here. So I think it's a decent trade that is completely uncorrelated to what the dollar does. So that is that. What else, Telio?
We also had a couple of numbers from Europe were not good. Apart from Germany, that is the GDP. We had the industrial production negative year on year, minus 1.5% year on year. Bad revision as well. Trade balance also tightened to just over 20 billion from 28, the previous reading. So it's European numbers have been hit and miss, and actually probably more miss than hit. And we continue in the same way. So I am personally bearish the euro in the medium term. Obviously, the path can do whatever you like, but I think next year or two, I think the euro is going to probably have a challenging future ahead of it. Let's put it that way.
Yeah, the question is against what?
Good question.
Because it's all a game about who does worse or who does better.
Well,
right?
You know me, I'm short Euro Norway, so that.
I'm with you there. I'm still short half of a position. There's no question about it, and there's still USD SEK, USD NOK, Euro NOK. They're still building some nice, in my opinion, so far. I have no reason to believe that those are not continuation patterns. So here's the Euro NOK. This looks like a very nice pennant. More importantly, looks like a really nice pennant above a very, very important trend line support. If we crack through this,
that's huge.
Yeah, it's huge. I mean, I see no real support until we get to 958, and who knows, if we crack through this, 958 might just be first this. I mean, we might have a lot more coming.
Plus, you get a little bit of nice positive carry on that trade, but it's not a lot. But
true,
everything
nothing
helps.
It's nothing that will make you rich, but at least you're not bleeding money.
Yes.
Which is quite important. I mean, even if it does nothing, you get something. So.
Yeah. And speaking about that, we're probably worth mentioning. We don't cover it as an instrument, but on
Forex Analytics,
but
we do cover
USD. I was talking about. I was going to say Sweden. We had CPI out of Sweden came in line at 1.8%, and it's been relatively stable. So, and you know how Norway and Sweden, they tend to influence each other as currencies. So I would always look at Sweden as well when
I mentioned it the other day. I mean, this is an important confluence of resistances. And so far, it seems to have done the work. We have at least stalled. This also looks likely to be a pennant, but there is alternative interpretations as well. To be very, very honest, I mean, this move lower so far hasn't really impulsive characteristics, so it can go either way. But if it wants to roll over, it should do it from here. So this is a pivot area for the market. And it's important to see what it's going to do from here. But since you mentioned it, unquestionably, Euro NOK seems like the best place to be. No dollar influence, and that's quite important because we know that the US dollar hasn't had a real trend since a long time ago. So it's it's shopping around up and down. But on the other hand, this is a much easier choice to make: European economy against Norwegian economy. So it's much easier to, I mean, correlated in some aspects, but very different in other aspects. So I think it's, from a macro perspective at least, it's a much easier trade to take. Okay, Stoel.
I agree, and that's it for me.
Okay, nice. So we actually have quite a few people asking about Palladium today, and I can't blame you. And we're going to go back to the currencies. But since you're asking about Palladium, yes, Palladium has gone, parabolic. I'm monitoring this parabolic ascending channel. We're currently at resistance. I mean, I've had to, in essence, utilize extensions, fib extensions that I rarely do. There is no question about it. This is the epitome of a parabolic move, and we know that when, rarely, but when you see a pair, any type of ticker, take this kind of a path that it goes almost vertical, and then it goes even more vertical, and then it goes literally vertical. One thing is for sure, these type of moves are unsustainable. Okay, and I thought that we might see the beginning of it when we got that plunge lower. Then we managed this. Keep in mind, this is the 16th consecutive up day, and we currently have a daily RSI of 85 and plus. So, for every time we do this, the chances that we're not going to see a very, very sharp correction lower become even lower. So what I'm trying to say is that these type of moves can very, very rarely end up in some type of a stabilization, a high plateau, let's call it, before moving higher. You can see this type of price action in these type of moves, right? Which was like a good uptrend, but it was somewhat orderly. So then we got this type of stabilization, which created this cup and handle formation. But then we started going more vertical by the month, and now we've gone to the part of price action that there is no return from it. Once this produces a decent reversal like the one we got here, that's going to be it. So I'm I didn't participate in the last pullbacks. I would have participated in this one if we went through this area of support, because it was the first area of support I was looking for, and I was skeptical because there was a chance that we could continue higher from there. I thought that probably we wouldn't. I thought that probably we would need to correct even lower, and if we saw a bridge, I was monitoring this rebound higher. It had like a tight channel on the 4-hour chart, so I was for several days ready to initiate a sort of position, but then it started accelerating higher and it went through the resistance areas I was looking for, because I was looking for this move to fail at any place before it goes over 1920. So once it went over 1920, I just stopped looking for a short position, and I was looking for sorting it at new highs. Now, I didn't really expect that we're going to see 16 consecutive up days and take us as high, but I'm pretty happy because I'm really looking forward to sorting this. I think that these 16 days of price action can be retraced within 5 days, literally. So I don't know where it's going to fail from, if it's going to be from here, if it's going to be from a little bit higher. I'm not going to try to catch a falling knife, the exact opposite, actually, in this case. I'm not going to try to, stop like a rocket that's going to space. But once I see a big reversal day, I'm getting involved with this, because, as I said, it's now in a trajectory that stabilization is not an option anymore. So it has to correct strongly and sharply lower. Yes, coach?
Oh, no, I was just visualizing you flying down from the sky and meeting the rocket, and you pushing it back down onto its launch pad. Like Superman.
So, I'm looking for a nice daily reversal here, a key reversal or whatever. Now, that's not the case with gold and silver, though, because gold and silver, and keep in mind, yes, palladium can take different paths than gold and silver are, because it's a metal. It's not a monetary metal. It's mostly affected by other factors. So gold and silver have stabilized at important support areas. So far, they seem to be building continuation formations. So my thesis is totally different from what I see in palladium. I think that palladium should fail sooner rather than later. I believe that gold and silver should continue higher sooner rather than later. Okay, so that brings us back to the other thesis, which is this is the gold-silver ratio. This looks like a big corrective move before another leg lower. This is the platinum palladium ratio, which today, and that's why I wanted to show this, today is breaking through this triangle, and guess what? This points to at least one more leg lower towards 140. And as you see, coincidentally or not, roughly that area is a very important support resistance area for the gold platinum ratio. So gold platinum ratio seems to be pointing to platinum overperforming, and this is the palladium platinum ratio, which probably is at the end of forming this ascending wedge. We've already had a little bit of an overthrow, but if you look at this, it not only has produced a long-term divergence on the RSI, but it is also producing shorter-term divergences in the RSI as well. So I'm expecting that to roll over also. Anyhow, if you're looking for a cleaner setup in the ratios, I think there is no better one than the gold platinum ratio. As I said, today it's in danger of closing below this triangle's support, and that should point to a move towards 140. Now let's go back to FX because we have some questions here as well. Question about Euro Kiwi. Let's have a look at both the Euros and the Euro Kiwi, and why not throw in the mix the pound Aussie and the pound Kiwi. So Euro Aussie ascending channel, long-term ascending channel, a rectangle within this channel. Support is roughly at 159.70. Resistance 163.50. You know, we're currently more or less in the middle of it. So my my point of view here is I have to be neutral, right? I mean, within this rectangle, within this ascending channel, there's nothing to do. I would feel much more comfortable trading it once we break out one direction or the other, especially if we break down to the downside. We have this channel's ascending trend line, every day approaching even closer to this rectangle's trend line support. So, at some point they might even confluence. So, once we go through that, that should be, a big short opportunity. Euro Kiwi, on the other hand, I was looking at this symmetrical triangle. We broke down below it, and actually I drew this as a possible price action. Once we did that we might find support here, rebound, retest the broken triangles, trend line support as resistance, and then continue lower. Now, we've done the first two parts almost in perfection. Who knows if it's going to get it rejected? I mean, you like it to the short side, this is the place you want to short it. We're going to find out if this triangle indeed is going to work as a resistance or not. Now, if we go back above it once again, then that's not a formation that's going to be working for us. So then we have to reassess. But until that happens, I would be very skeptical buying it exactly here. You can obviously see from this chart, which I haven't changed in quite some time, the reason. So far, I'm skeptical that this rebound isn't just corrective, right? So far. We're going to know soon enough. There's no question about it. Keep in mind that if you look at the EURNOC, this is also a corrective rebound. So, if you look at EuroCAD, this might also be a corrective rebound. So, I'm a little bit skeptical, having to do with these rebounds. And I need a lot more to be convinced that, looking higher is the way to go. Okay, let me see. We had a question about Aussie against the Swissy. Probably haven't had a look at that in quite some time. Yep, it's apparent that I hadn't had a look at this in quite some time. Last time we looked at it, it was there. I expected another leg higher. We got that, but with some delay from what I see here, and then lower. Perhaps that's what we're getting here. In general, my thesis here was that, looking lower as long as we remain below this broken triangle is the way to go, and that seems to still be the case. This was probably a pennant, right? So it's bearish. It remains bearish. There's no question about it, right? I mean, we have nothing on this chart since we produced a double top up here at 78 cents. We have nothing in this chart that isn't showing a downtrend. I mean, we have a sequence of lower highs. And as long as that's the case, keep looking lower. I mean, next support is the previous low at 65 cents. Okay. And keep in mind in general, and thank you for reminding me, the Swissy, which is another indication that being long stocks, I mean, being long stocks here doesn't make any sense. A, we might get the buy the rumor, sell the news, as Blake has mentioned, and we have mentioned multiple times. B, look at S&P on resistance. Look at Dow Jones at resistance. Look at NASDAQ at resistance. Look at the IWM, found confluence of resistances up there. Look at the VIX, still diverging. Look at the DAX at resistance. So, first of all, doesn't make any sense trying to buy indices up here. I mean, it's lunacy if you ask me. Second of all, just have a look at this proxy for risk, which is EURUSD. EURUSD retested the, one of the most important support resistance areas on the FX world, the 120, and that is huge because we know, I mean, traders that have been trading for years know that this was for years the floor that the S&P had imposed until they actually let it happen. And if I remember right, I think it was at some point of the year very close to where we are. Yeah, 15th of January, actually, I remember well. And today we have the 15th. So it's the anniversary, actually. So yeah, they let go of the floor, as of today, 5 years ago, exactly. We topped out by testing that 120 area in the mid of 2018. And since then, we have been, clearly and steadily moving lower. I mean, we only have two types of moves since then, lower and horizontal. So, this is in general a decent proxy that things are not so rosy, right? People running for the Swiss currency when we know that the S&P has the higher negative rates, so the lower rates globally, so you have to pay quite a lot of money to just keep your money there, says a lot, right? And we also know that the S&P, I mean, they've openly said it, despite letting the floor go 5 years ago, they have openly said that they will keep supporting the EURUSD on the market. So we know that this move lower is despite the S&P's efforts to keep the currency pair, decently elevated. So, that tells all you need to know about it. Now, I've read there is a lot of speculation that since the US decided to put Switzerland in the list of the countries that manipulate their currency, the last few days we might have had like an acceleration lower because of that. But in all honesty, personally, I think I'm pretty convinced that they couldn't care less. In all honesty, they couldn't care less. So I don't really think that they're sweating about it in any way. What is the US going to do about it? What are they going to do? Declare war to Switzerland? Or what are they going to do? Are they going to damage their economy in some way? Doing what exactly? not buying their products. It's not that Switzerland exports products. Switzerland has basically one industry, and that industry is yeah, okay, yeah, but I don't think that yeah.
Yeah, but they lost their their most, I think, important product, which was secrecy, when they began to cooperate with the US.
That would be the case, Dale. I mean, in isolation, you're absolutely right about that. But the next question is the following: is there any safe Western world country that you can park your legal money, not caring about secrecy? That means if you actually want to have the certainty of going through, for example, a crisis or whatever.
Yeah, and that it'll still be there.
Exactly, that can compete with Switzerland. I mean, it's Switzerland and
Grand
Luxembourg. Yeah,
Grand
Switzerland
Cayman.
and Luxembourg. That's it. Afterwards,
Cayman.
yeah, something. Do you think your money is as safe there as they are in Switzerland? If we're, if we're talking about extreme, right. If we're talking about extreme financial stress.
Switzerland has really, the test of time through World War and
exactly.
Everything. Yeah. It's like gold. It's probably
it's the gold of monetary of fiat monetary system. Yeah, that's it. The gold of fiat monetary system. Yeah.
Okay. Have you ever been there?
To Switzerland?
Yeah.
That's actually a funny story. I should go actually, because one of my best friends is working there as a doctor.
Can you send me a gnome?
I've been.
Have you met a gnome? A gnome?
No, I've been once, just in the airport. I went with a client because I had some people I knew, and back then, at the beginning of the European financial crisis, you could actually open an account in the airport because the big banks had branches in the airport. Yeah.
Wow.
So we traveled together there, so he could make arrangements to send some of his money. Yeah. So I've been once and stayed in the airport for a couple of hours. So that's
wow, you really got to
yeah. But I'm looking forward for Jason to growing a little bit older so we can go more frequently in trips, and definitely I'm going there because, as I said, I have one of my best friends, so why not?
All right, well, thanks. You got 3 minutes now.
I have changed you to agree with yours that yields will likely trade towards lows of last year. Steve Knockcad are going to face massive headwinds as oil trades towards 50. Yes, that might be the case, although it's not as, the correlation is not as strong as it used to be. That's why I prefer EURNZD anyhow. Now, having to do with rates, let me say that every single bond from the benchmark bonds you can have a look at, just look at this. The Bund, the 10-year, the 30-year. Here's the yield, by the way. Yield
look at the 30-year yield. It's right on the trend line.
Yeah, I mean, no matter what you look at, the only thing that can actually break down, yeah, and yields moving higher is the Bund.
Right.
So that is also one
that should favor the euro.
Exactly. That should favor EURUSD to the upside, right?
Yeah.
Because the Bund looks like it might produce one more move to the downside, but every single bond you see from the US side, it looks like it's about to break higher, so yields moving lower. Not that it's unlikely for the Bund to just be building some type of a base and accelerate higher, but between Germany and US currently,
that's something Mark Chandler also addressed, Steve. It's one of the pillars of support that the dollar is losing.
Oh, for sure. I mean, the dollar will have to move lower if that's the case. If we see the treasuries diverging from the bonds, Oh yeah, I mean, there is no alternative. I mean, the euro will have to move higher sooner rather than later.
Well, nothing has to, but it makes sense it would.
Yeah, but it's a very, very high probability if that's the case.
Yeah.
That's the case.
Well, you were talking VIX. We have Michael Listman with us, and his handle besides his name is UVixy. So, we're going to hear about
okay, that's a good one.
Yeah, we're going to hear about the VIX and how he trades that all the derivatives around it. That's my guess. So he's here.
My guess, without being a specialist, is that this is not the place to be short of VIX.
Yeah, don't sell volatility down here.
No,
Yeah.
don't. Really
Okay.
don't. Not as we speak.
Thanks, Steve.
Thank you, Coach. Enjoy the interview.
Okay. Okay, Michael, I see you. And I was going to unmute you. Are you there, Michael? Hello?
I see him as well. You have indeed unmuted him.
There were two of him.
Oh.
Okay. Michael?
Okay, let me find the other one then as well.
The other one I think is gone now. There's only one.
No, I see second one.
Oh, okay.
Now it's gone. Yeah,
Michael,
there was
you're unmuted. I think he disappeared. Maybe he didn't want to talk about derivatives of the VIX. I scared somebody away with my
I can see the
introduction.
I can see the second account again. Let me promote that as well.
Okay.
And see which of the two will work actually. Let's see.
You're all looking okay, guys.
For some reason, this
Yen's
account
10 pips away from negating the breakout.
Okay, he says still here. Okay, so he can you hear us speak, Michael? So I can give you some instructions. Can you type in, please? The second account seems to be going online and offline.
Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Use less leverage.
Okay, we have a question about
where they could buy my.
Oh, Michael asked if I'm still bearish the S&P. Absolutely yes. I have a question. Can someone explain to me how China is signing this phase one deal? I mean, tariffs are not removed. They have to buy agricultural products every month. Does this mean that things are so bad in China that they have? No, I don't believe Dr. Strange asked this question earlier. I didn't see it. I don't believe that's the case. I believe that they're getting more than what they're offering. And I believe that they will never end up buying the amount of products they are claiming to be buying. We're going to see that in action, but I believe that this phase one deal, in essence, is better for them than it is for the US.
Yeah, Michael, we're not going to be able to do it. It looks like you can hear fine on the phone, but you can't screen share or anything like it. So we'll reschedule, buddy, and maybe bring in, and I don't know, what we could do about the laptop, but okay. And Michael, why don't you just give us one comment and I'll show you on Twitter. What's your take on VIX right here? What are you doing with the current vol setup here? You want to share that and I'll promote you.
And here is the Swiss against the yen that a friend here asked for. So as you see, broke through this.
Could we do audio? I don't even think we could do audio either, Michael, with you on the phone. I'm not sure. Can we, Steve? He's saying the phone works and the his laptop keeps disconnecting. So I think we've had call-ins before and it hasn't worked.
Yes, he has to use the computer.
Correct.
Yes.
Okay, so we'll have to reschedule it, Michael. Get that laptop fixed. You know, when the VIX goes to 35, buy a supercomputer. Okay. All right, so that's a wrap, Steve, unless you want to continue on.
No, just give me 1 second to answer this question that we had for Swiss yen. So Swiss yen, there it is. There you go. So there you go. Swiss yen broke above this descending trend line, seems to be producing some type of an impulsive move here. I mean, it built a base here. You can also view this as a descending wedge, right?
Yes.
Give me a second because magnet didn't work as intended. There you go.
The magnet.
There you go.
I use that. I'm dragging it on the candle of euro to make it get through.
And we're currently roughly at the 61.8. I mean, it looks very well bid, right? Expect 112.40 to be support from this point on. I'm not a fan of trading currencies that are so similar to each other.
Okay.
But this move seems to be decent. And as I said, if you're looking to buy it, a retrace to 112.40 should be a decent buying opportunity. That's what I think about it. Okay. Steve, where would you sell EURUSD if you were bearish? Below 110.80, as simple as that. So below 110.80, I think there's a big chance that the EURUSD is going to be failing. Above 110.80, I wouldn't want to be short. Yeah, coach, I think we go for the.
Yeah.
Yeah. So
okay.
Don't. I put if you browse higher, I put the link for registering if you haven't done so for the daily roundup webinar. I mean, I put a link that has all our webinars, and there's a button to register for the daily roundup there.
Yeah.
Blake is going to be covering. The daily roundup is like a 10-15 minute webinar, just covering what has happened so far and what we're looking towards as the Asian session is approaching and as volatility is decreasing for the US session. So I think you should, if you haven't done so, you should register for that and watch Blake.
Jim's asking for where the link is again. Maybe you could.
It's in the chat. It's in the Zoom webinar chat. If you browse higher, I've put the link there like 45 minutes ago. So you'll find it in the Zoom webinar chat. Okay, not in the question and answer. In the chat, there are two places you can type or see. One is the question and answer, and the other one is called the chat. Okay, so you'll find it in the chat. So browse a little bit higher in the chat window, Jim, and you'll find it there. I put it there. Okay, so you can register there. And something even simpler, if you go to Forex Analytics, there is a link here that says webinars, right? If you browse lower, here is the daily roundup webinar, and here's the button to register, right?
Yep.
As simple as that. Okay, coach.
All right, well, Steve, a lot of times we do trades. I know you do it in pieces. A lot of people, they're all in, all out. And, it's nice when it happens, when you have immediate gratification and there's no drawdown. You don't have to take any
Yeah, that's
heat.
ideal.
But for me, it's the exception, not the rule. You know, and I'll do it a few times. And when I was younger, and I thought I could do it all the time. But you know what? It ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. Cause I'm not worried, cause I know USDJPY is going to fall.
Yeah, I wouldn't disagree with that. I mean, it's a good risk-reward ratio. Speaking of which, and since you indirectly referred to, you know, to trade, to risk management in essence, and, you know, trading setups.
Yeah.
I'm happy to announce. Some of you might have noticed that. Yeah, some of you might have noticed it at the bottom of our weekly newsletter, where we say which projects we're working on. Two things. First of all, we are at the very, very last phases of beta testing our MetaTrader trade copier in essence, right? So that should be out quite soon. And we have started developing a very, very, very nice browser-based, so you can use it from any type of device. Very comprehensive trading journal, because we think that, you know, trading journal should definitely be a tool you use every day. It's the only way you can actually see what you're doing right, what you're doing wrong, and you know, do more the things you do right and you make money from, and do less the mistakes that have been costing you.
Yeah, if you're lazy, you're not going to make it. Okay, so take
a
lot
for
of
sure,
energy and effort
there is no
to be a
there are no
discretionary.
shortcuts.
Yeah, you want to be a discretionary trader, you have to put in the time, and you can't be lazy. It's like, you know, so you're not out there swinging an axe, or, you know, you don't have a drill and you're pounding concrete. You still have to put in the hours, and really, you have to live and breathe it, especially during the learning curve. So don't just count your pips, everyone. Count your blessings. We'll see. I'm biting my fingernails over my FX call says I'm going to get burnt. No, you know, if I might be wrong, but I'll take responsibility for being wrong and getting stopped out. And then the most important word, you know, I've really come to believe that this year, in your life and in your trading, and everyone who's still here, write down this word and put quotation marks and an exclamation point next to it. Next. See everyone tomorrow.
Bye-bye, coach.
Okay, thank you, Steve. Adios, everyone. Good hunting. Euros at new highs for the session. Where's your stop, Cole? Talk to you later. God, it's